All right, everyone, let's discuss cryptocurrency. It's the buzzword of the decade, and many are eager to join the movement. It may sound like something out of the Matrix, but stay with me. This is no longer science fiction. It's our current reality. Cryptocurrency is essentially digital money. It's not merely numbers on a screen, it's a completely new way of thinking about finance. It's decentralized, meaning no single government or bank has control over it. This gives it a unique advantage over traditional currencies. Think of it as a digital version of gold, but instead of requiring a vault, you have a digital wallet. It's portable, accessible, and revolutionary. And instead of Fort Knox level security, you have cryptography. This is the foundation of cryptocurrency security. Cryptography is simply a sophisticated term for extremely strong encryption. It's what makes your digital assets secure. It's what protects your cryptocurrency from hackers and digital thieves. Without it, your assets would be vulnerable. It's like having a digital lock on your digital wallet, and only you possess the key. This ensures that your investments are protected. Now, you might be thinking, this all sounds a bit too good to be true. And that's a fair point. And you wouldn't be entirely wrong. The market can be as volatile as a roller coaster ride. Cryptocurrency can be a risky venture. But that's why we're here, right? To navigate these waters together. To break it down so you don't end up like a confused individual staring at a complex chessboard. We'll simplify the complexities for you. We'll delve into the details of wallets, exchanges, and all that later. There's a lot to cover, but we'll take it step by step. But for now, just remember, cryptocurrency is digital money, secured by cryptography, and it's as independent as a cat in a cardboard box factory. Stay tuned for more. Now let's meet the players in this digital Wild West. First up, we've got Bitcoin, the OG, the trailblazer, the one that started it all. Think of Bitcoin like the digital gold standard. It's the most well-known, the most valuable, and it's been around the longest. But Bitcoin's got a younger, hipper sibling, Ethereum. Ethereum is like the Swiss Army knife of crypto. It's not just a digital currency, it's a platform for building all sorts of cool stuff like decentralized apps and smart contracts. Think of it like the internet of money, where you can do everything from trading digital kittens to buying virtual real estate. And then there's the rest of the gang: Litecoin, Dogecoin, Ripple, the list goes on. It's like a digital zoo out there with new creatures popping up all the time. Some are cute and cuddly, some are downright bizarre, and some might just bite your hand off. That's why it's important to do your research before you invest in anything. Don't just jump on the bandwagon because your neighbor's nephew's hamster made a killing on some obscure meme coin. So, you're ready to dip your toes into the crypto pool? It's an exciting world, full of potential and innovation. First, you'll need a place to buy and store your digital doubloons. This is where cryptocurrency exchanges come into play. Enter cryptocurrency exchanges. These are like the online marketplaces of the crypto world, where you can buy, sell, and trade different cryptocurrencies. They offer a variety of tools and resources to help you navigate the crypto landscape. Think of them like the digital equivalent of Wall Street, but with fewer suits and more people wearing pajamas. It's a more relaxed, yet equally intense environment. Two of the biggest names in the game are Coinbase and Binance. Each has its own unique features and benefits. Coinbase is like the friendly neighborhood bank of crypto exchanges. It's user-friendly, regulated, and a great place for beginners to start. Its interface is simple and easy to navigate. Binance, on the other hand, is more like the Wild West saloon. It's got more options, more risk, and a whole lot more going on. It's perfect for those who are more experienced and looking for a wider range of trading options. Which one you choose depends on your risk tolerance and what you're looking for in an exchange. Do you prefer simplicity and security, or are you looking for more advanced features and higher risk? Once you've bought your crypto, you need a place to store it. This is a crucial step in your crypto journey. This is where wallets come in. They provide a secure place to keep your digital assets safe from hackers and other threats. Think of them like your digital piggy bank, but instead of storing spare change, you're storing digital gold, or at least digital tokens that you hope will be worth something someday. It's your personal vault in the digital world. Now there are two main types of wallets: hot wallets and cold wallets. Each serves a unique purpose in the world of cryptocurrency. Hot wallets are like your everyday wallet, always ready for quick access. They're connected to the internet, making it easy to access and spend your crypto whenever you need to. But just like your real wallet, they're also more vulnerable to theft and hacking attempts. Cold wallets, on the other hand, are like your savings account. designed for long-term storage. They're offline, making them much more secure from online threats, but also less convenient to access quickly. Think of it like this. If you're constantly buying and selling crypto, a hot wallet is like having cash on hand for daily transactions. If you're holding onto your crypto for the long haul, a cold wallet is like storing your gold bullion in a vault, safe and sound. The choice is yours, but remember, with great power comes great responsibility, and also the potential to lose all your money if you're not careful. Always stay vigilant. So, there you have it. A quick overview of hot and cold wallets. The basics of crypto investing, simplified for you. We've covered what cryptocurrency is, the different types out there, where to buy it, and how to store it securely. Now, before you rush off and invest your life savings in Dogecoin, let's talk about the elephant in the room, volatility. It's crucial to understand the risks involved.